most, if not all, the fundamental bullish reasons to own gold still exist. The only good news is they've lowered the price in order to participate, because there's so many variables left in this war scenario that we can retest at least those lows made a few days back around, just above 4,000 on gold and just above $60 on silver. And as much as it sounds and will crunch some people to even think that occurring again, it would actually be bullish to do it and then rise and go above the most recent highs. That would really give people more of a feeling that the correction is behind us. But I think longer term, if people still invest for months and years, I have not changed my opinion that we are going to be, I believe, before the end of the year at a new all-time high on gold, and possibly with silver as well. But I think gold will lead silver for the rest of the year.
This one is a deep trench, without a doubt. The resolution is to end the conflict somehow between the U.S. and Iran. If that occurs, we could really see a pivot from bearish to bullish.
Gold just dropped, and investors are starting to panic. But what if this pullback is actually the best buying opportunity of the year? According to experts like Peter Grandich and Gary Wagner, this correction could be setting up something much bigger. In fact, gold may still be on track to hit new all-time highs before the end of the year. So the real question is, are you looking at weakness or a setup?
The heights of the parabolic rise, which I was calling it, I didn't call it the end of the gold bull market, but I thought there'd be a sharp correction, looking for the low 4,000s in gold and down to the high 60s in silver. I wasn't predicting a war, but, it is what's occurred. And now the only thing that really is going to matter, as you and I speak on this Wednesday, what does it do going forward? Too many people, by the way, in the investment world, both professionally and individually, spend too much time on the longest line in the universe, and that's the could have, should have window. And it's just a waste of time. Now the only thing that's going to matter what goes forward. I think we had, and technically you can say we're in a bear market because it corrected more than 20%. That's an old standard. I just think it's a harsh correction. It was an excuse, from the parabolic to come down, and then on the war, we lose sight of this, and you live and breathe it moment to moment. I don't. There's other things in my life, but whether you're partly or fully involved with gold, it had an extraordinary 2025. And I think some people built up some expectations that that was the normal. And I think we're returning back to and we'll have players more sound and rounded in this versus the momentum Johnny-come-lately folks that came into it at the tail end of the parabolic rise. So I'm not too worried that this is somehow the end and we're going to go a lot lower even from here. I don't think we're out of the woods yet in terms of the lows already being made. In other words, there is still a possibility, because there's so many variables left in this war scenario, that we can retest at least those lows made a few days back around, just above 4,000 on gold and just above $60 on silver. And as much as it sounds and will crunch some people to even think that occurring again, it would actually be bullish to do it and then rise and go above the most recent highs. That would really give people more of a feeling that the correction is behind us. But I think longer term, if people still invest for months and years, I have not changed my opinion that we are going to be, I believe, before the end of the year at a new all-time high on gold, and possibly with silver as well. But I think gold will lead silver for the rest of the year.
At some point, and I believe it could be a week or so before we see it, but absolutely, in terms of that correction I was looking for, the ABC correction, if we move over to the chart, after we hit this all-time record high, and that was back on the 29th of January, we did go into an ABC correction. The A wave took us to 44 and change, and then we had that B wave, which came in just right. The B wave should always be between 50 and 70% of the move down. And this move here, as you can see, the lines are light, but this is our final C wave down. And the interesting thing is the C wave itself, when you look at the action on Monday and you look at the wick on that candle, let me go ahead and blow this up a little bit. What you see is that won't do it. What you see is the wick came down and actually challenged but found support at that 200-day long-term moving average. And so do I believe it's over? I think that we have the ability to retest if support holds at the 200-day moving average. Also, considering these moving averages broke through the 50 simple day moving average, then the 100-day, and now that last banyan of hope, which we've relinquished because obviously we've seen this go down, and you have to take the truth. It's been bearish, and we have a bearish demeanor right now. We can talk about the reasons later, but if it does continue to move lower, it's really got to test 4,097, and that's the low that came in on Monday, which matches the 200-day moving average. Now, it recovered quite nicely, even though it closed lower on Monday, went up for a couple of days, and now we have a significant sell-off, down roughly $100, 97 now. So you can see it's moving back up from these lows that came in earlier during the day. In terms of the technicals and the ABC, that's how I see that playing out. We are in the last part of that C wave, but it could go back to test these lows. It could easily falter. You see these X's here. So roughly at, wow, so I haven't seen gold like this, but at 42.85, if it does come down and test the 200-day moving average, that's at 4,090. We'll have to see how it plays off. Oil has been the big thing. And the other thing that's really spooked traders is that it is perceived now that the Federal Reserve will not cut rates. We knew that during the announcement that was made during the Fed meeting, but now there's a 38% probability, according to the CME's FedWatch tool, which talks to interest rate futures traders, and they've got to be pretty sharp on that, otherwise they wouldn't be trading the interest rates. A 38% probability that they'll actually enact a rate cut later this year.
Let's break down what's really happening in the gold and silver markets right now. First, despite the recent drop, nothing has changed fundamentally. The same drivers that pushed gold higher are still in place. Inflation pressure, geopolitical instability, central bank demand. What we're seeing now is not a collapse, it's a correction after a massive run. After a parabolic move in 2025, the market needed to cool off. And that's exactly what this is, a reset phase. Now here's where it gets interesting. Gold could still retest recent lows, around $4,000. Silver could revisit the $60 range. And while that might sound bearish, backhand index pointing right, it could actually be the most bullish thing for the market. Because a deeper correction followed by a strong rebound would confirm that. The weak hands are out. The market has reset, and the next move higher is sustainable. Gold has tested the 200-day moving average, which is a critical support level. If that holds, we could be very close to the bottom. But if it breaks temporarily, that doesn't kill the bull market. Even a move lower, potentially toward $3,500, would still fit within a long-term bullish structure. Right now, gold is being driven by liquidity and global uncertainty. There are major geopolitical tensions, especially involving the US and Iran, and that's creating volatility across all markets. Here's something most investors miss. Gold isn't just a safe haven. It's also a source of liquidity. So during market stress, investors sell gold to cover losses elsewhere, which causes temporary price drops. That's why gold can fall, even when the long-term outlook is strong. Here's the key moment to watch. Backhand index pointing right when the stock market falls, but gold stops falling with it. That's when you know the liquidity crisis is ending, and the next bullish phase is beginning. We're not fully there yet, but we're getting close. Looking ahead, central banks are tightening gold supply. Inflation pressures are building. Energy prices are rising. And rate cuts remain uncertain. All of this supports higher gold prices over time. That's why both analysts believe backhand index pointing right gold will likely hit new all-time highs before year-end. Backhand index pointing right and silver will follow, with even bigger swings.
People get into liquidity needs. And what we tend to do as humans, and one of the main reasons you might have bought gold originally, was to have that at ability to reach that liquidity need, because you don't want to sell illiquidity stuff, because that's where you take a very large loss in. So gold actually, people were saying, oh, it's not the safe haven and all. It was. The reason you had bought it at 1,500 in 2025 at 3 was to have this position, to have liquidity and not get yourself, bent off. And the tendency of the human investor is to sell your winners to average down on your losers, when realistically you should be doing the opposite. But that's just the way of the world going. But outside of a very hard fall down here, one of the groping signs, and we just started now, and by the time you hear this might not even be working anymore. But as of today, gold has basically moved with the stock market. If the market went up, gold rally. If the market went down, so we know it was still tied to a liquidity. The moment you'll know that you're getting closer to the bottom is when the stock market goes down, but gold doesn't. Even if it doesn't go up, but it doesn't go down. Then we're at the end of the liquidity crisis. I don't know if we're there yet as you and I speak. The other sign would be, and that's what we already, which was kind of unusual because it jumped ahead of the physical gold, the shares started to show that. We had a down day, but the shares, the mining shares, and even the juniors didn't go down. So they looked pretty washed out. But for any reason, if we do break and go below 4,000 in gold, and I'm not predicting this, so if it happens, I was wrong with everybody else. But you could theoretically make a case that gold could trade all the way down to 3,500 and still be in a long-term bull trend. Only if it got below that, then you could really say, for whatever reason, the bull market was over. But I think we will hold those lows just above 4,000 and just above $60 in silver. We may not shoot up right away, but I don't think we have more downside than those lows.
Fundamentally speaking, Turkey is a world power, but a drop in the bucket compared to what could happen if some of the major countries begin to do something. Russia just announced that they are not letting any of their gold go, and they're a huge producer. And that, to me, is significant. But absolutely, that we could see a domino effect. We haven't yet, but I wouldn't count it out. As you said, we've been through the trenches. This one is a deep trench, without a doubt. The resolution is to end the conflict somehow between the U.S. and Iran. If that occurs, we could really see a pivot from bearish to bullish. Until that occurs, I believe that the bearish pressure will remain. We have not seen this in a while, where central banks are using gold to boost liquidity and to do things with. What Russia did, what Turkey did. These are defensive mechanisms that are in place by the central banks, and they're reacting to the real possibility of inflation getting out of hand. And one thing is that crude oil serves as a very sensitive commodity to inflation, because it's across the board. It challenges corporations, companies, individuals. And once that happens, where the individual is suffering because of these high prices, I believe in the U.S. that crude has come up by over a gasoline, has come up over $1. That's something that's got to be resolved, and it all stems back to the military conflict in play.
So don't let short-term volatility shake you out of the bigger picture. This isn't the end of the move. It's the phase that prepares the next one. The question is, will you recognize it in time? If you found this valuable, hit like, share it with someone watching gold and silver, and subscribe for more breakdowns like this. Because in this market, timing and understanding make all the difference.